Welcome back, and joining us on the show now is Peter McGuire, CEO at XM Australia. Peter, hi, good to have you as always. I want to start talking about the gold and silver prices first, where this is the fourth straight week of decline. We're trading below $1,900 per ounce. And, you know, a lot of people say that even with 5.5% at interest rates, and look at where the dollar index has gone and the concerns, but with the gold and silver still holding at these current levels is perhaps good news. How would you look at the prices? What's your sense before this year ends?
Well, good afternoon, Manisha. Yeah, a couple of things. First off, silver, it's taken a bit of a hit. There's no doubting that. And that US dollar index back around 103.50. Maybe it's got some more legs, and there's still every chance you could see a 104 for that US dollar index in the short run. So I won't be surprised, possibly even by next week. It seems to be gaining with momentum. Where we're looking at gold, sold off, and I'm sure that it's having a bit of a breather at the moment, but I think its best days are ahead of it. So I'm not too worried about it overall, and I'm just, it's wonderful to trade because there's plenty of volatility, Manisha, and that's what we want, movement.
You know, as the dollar index starts to keep above 103, the reports of 104, 105 have started to come back. What's your sense on this one?
Yeah. Well, I think so. I won't be surprised. I mean, you've been really hit hard. That Aussie's been hit hard. It'll be nearly at 63 cents shortly. Euro's off, pound. Have a look at where the yen is. So I won't be surprised, possibly, a 103.80 by, say, Tuesday, Wednesday. It might touch it. And possibly you might see 104 by next week. As far as going higher, we've just got to work through things. I'm concerned as far as what's happening with this Chinese property sector. And everyone's, keeping a very close eye on it and what impact that can have naturally to bondholders and where it moves from here.
Since you mentioned China, and while we have seen a lot of rhetoric from them, there's a lot of conversation, pledges, reiterations even, but not much on ground.
No, there's not. We're still waiting. I mean, we've been sitting on our hands for a number of months. We thought they'd come out of the blocks, running, sprinting after Lunar New Year. And, when you're looking back, I thought March and April weren't too bad for them. And then it just seems to have slowed down considerably. And we're looking at the global market as far as demand picture, what consumers are doing. And we all understand there's, with the inflation side of it, it's ticking along okay, but nothing like it was. So they've got to look at what they can do internally. And, still a overhang of a large proportion of apartments and homes that are uninhabited, Manisha.
And that brings us to metals, because this is another area which has seen constant declines. I mean, today is a bit of an opportunity buying, but with the way the China seems to be going, and every single data in the month of July from China has contracted or has come lower than the street expectations. How would you look at this sector? I mean, we still are better than where we were in sense of May, but with the kind of profit taking that we've seen, how would you trade?
Well, you're at 8,800, 8,900 for copper, and I thought we're off to the races. Maybe a 9,200 you could have hit, and it had momentum, and everything was looking relatively good. And it's been spanked down since then. So, do we see a 7 handle in front of copper? You're sitting at around about 8,200, I think, for or 82 and change for a metric ton on the LME. So they've all been hit hard, and where it rolls, maybe there's further softness. I'm looking at what happens as far as iron ore prices, tin, aluminium, nickel, all under the pump at the moment.
So if you had to, put out a ratio on a risk and reward in case of metals, would you say we have another 2 to 3 to 4% decline from here? Are you looking at any upside at all for the coming of couple of months?
Well, I want to get through August and I want to get through September because they're big months, and I want to see where we are start of October. And because of the China situation, what's happening as far as bonds, what's happening with the yield side of things, inflation, do we see further rate rises, what the general appetite is over the next 6 weeks, Manisha, and that will tell me where we're going as far as the barometer, like copper. So, sit on your hands, let's have a look, but I think it's going to be exciting.
All right, it will be exciting. What we'll do is actually take a short break, come back, wait for that excitement. On the other side, we'll have business lunch talking about all the market action.